Welcome to Regulatory Ramblings. India's come a long way since November of 2016 when Prime Minister Modi pushed the country into a new age of digital payments by outlawing larger denominations of the Indian rupee, the 500 and 1,000 rupee note. In that time, India has made market improvements and is, in fact, in some ways ahead of a good number of developed jurisdictions in terms of digital payments. Our guest today, Kamath, and his colleague Kittane from Nishith Desai, one of India's premier cutting-edge high technology law firms, is going to talk to us about several issues, including the evolving landscape of fintech models, digital lending, e-wallets, cryptocurrencies, taxation, virtual digital assets, and CBDC in the Rupee. So, gentlemen, thank you for joining us. Aaron, Puru.
Our pleasure, Ajay. Thanks for having us.
Finally, we got to do this, and quite a few of our listeners and viewers are in India. So when we first started talking about this late last year, there were certain proposals regarding the e-rupee, and now we're well into 2023, and what's the landscape looking like now? I mean, what in terms of the evolving landscape of fintech models? I mean, the factors driving it and the investments that are going into it. What do you see? It looks quite exciting. I mean, just the number of startups we're seeing.
It's been phenomenal. I mean, fintech in India is flourishing. It's booming. Let's look at maybe some of the factors why it's
a lot of cottage industries, right? I mean, they've yet to attain a certain scale, or is that a matter of time?
So it's a mixed bag with that respect, but I think it signifies the overall health in the sector, right? For example, in the last 8 years, we've had more than 1,200 investments, foreign investments in the sector. That's averaging 150 deals a year, right? Right now, we have a large amount of unicorns, and those unicorns are spread across, payment companies, blockchain, crypto-focused exchanges, stock trading, and demat accounts, POS terminals, wallet and fintech UPI companies. So we'll come to some of these models in more detail, but it's been thriving. What has been contributing to that? Well, if you have to say, I'd say there are two phases in India's fintech history, right? One is with the whole turn of the century, the dot-com boom. You had then e-commerce, come in the 2000s. Flipkart just started out. Now, Walmart acquired, but, Flipkart started out, and later on Amazon came. We had these e-commerce players start, and that was really the first step, because a lot of that gave way to the payment gateways to facilitate the online transaction. And for me, that was the first step in fintech, for the PayPal sort of companies to come and process those transactions online, right? We had very, very basic set of regulations, in 2009, that just asked them that mainly govern the fund flow. It didn't require licenses, nothing, but it just said, use a nodal account and, certain permissible debits and credits. But that really started. And then, as you said, post demonetization, really, you can count it as sort of, the next innings in India's, fintech, landscape with, that immediately overnight, e-wallet, UPI was still picking up. I'm not sure we even started UPI when demonetization happened, or maybe it was not that big, but that gave a big boost for e-wallets. And immediately, the likes of Paytm and all got their valuations skyrocketed. And obviously,
this happened so quickly. This was like within less than a year. You saw such innovations. And I mean, necessity is the mother of invention, right? When your back's against the wall and you're forced to get creative to survive, people can come up with wondrous things under such circumstances. War, for example, often does that to people, or desperation and necessity. And so many innovations came about because of that. Books have been written about it. Students have done dissertations about demonetization, galvanizing India, payment systems. So some people do feel lost out. They feel they lost out, but it modernized the country.
Definitely. I mean, it's the problem we spoke about, right? Where cash was not accessible.
Right.
The people started loading their e-wallets. People started loading their MobiKwik, PhonePe, Paytm wallets, and those companies then, if a fintech ever needed a boost, well, the government, indirectly just gave them the biggest boost that they got. Everybody started using e-wallets. Uber, was linked with a Paytm, so you could pay through a Paytm wallet. Everything, people started linking wallets to everything. It's changed now a little bit with UPI, and we'll come to that and some of the models which has come in. But India has always been a country. Obviously, the population, we are 1.3 billion people. We have at least 800 or 900 million people connected to the internet. Right. Data, internet, telecom services are amongst the lowest priced in the world. Right? Everybody has internet from different streams, different professions. A security guard in his free time is watching a cricket match on his phone, sitting by the gate, right? Everybody has ready access to the internet, and that has really facilitated transactions. So India is hot for low value transactions, but high volume transactions. And that's why it's a country that can never be ignored. And till today, whether it's the fintechs, whether it's e-commerce, whether it's gaming, media streaming, you cannot ignore 800 people connected to the internet, and such a wide consumer base.
At some point, the numbers make a difference. I mean, I think as Stalin said during World War II, the quantity has a quality all its own. And we see that even in Macau, that most of the Las Vegas casinos gaming revenues now come from Macau, more of them, because of the billion people in China next door, many of whom like to gamble, more so than Clark County, the district in which Las Vegas sits. So yeah, I mean the numbers clearly make a difference, and it's also different. We're not just talking about financial services, but that's what everyone seems fixated on, because of the benefits, the money to be made, how it can transform the economy, but also the consumer fraud issues, how you safeguard that. So the traditional role of payment service providers vis-a-vis card networks and banks. I mean, this is a fundamental shift in the licensing regime. I remember some years ago, I attended an ACAMS event, the money laundering people, and they someone from a bank in Abu Dhabi pointed out that for a long time banks have been they've gotten lazy and complacent. They thought the world couldn't do without them, and he said people need banking services. They don't necessarily need banks. So now you're in a new age with telecommunications providers providing banking services. So how should they be regulated? How should they be licensed?
Definitely. I mean, just taking a step back, to set the context, right? Yeah. India has always had a good, steady banking system.
Right. Because inclusivity was a key thing from the start.
Absolutely. And if you look at, I mean, just from a cultural perspective, the mindset of the Indian society, the culture, the working class, the middle class is to save, put the money in the bank, have a retirement corpus. It's a very it may be a little different from the Western culture.
Retirement, education, weddings, those are the big three, right?
Yeah. Money in the bank, for a rainy day, for save up for a wedding in the family, for retirement.
And the house, and the house.
So Indians have always been very dependent on the banks, right? Now, we've had the Banking Regulation Act from 1949. The Reserve Bank of India, who's the regulator, for the banking and financial institutions, the act was, made in 1934. So we've had very old, regulations. But how have traditional banks, worked? Traditional banks have been the backbone of, India, the saving mindset, the economy, right? But somewhere down the line, things were not really coinciding with the technology advancements, with e-commerce, with digital models. And somewhere, whilst banks have always been trustworthy, safe, to deposit money, to take money out, to transact, all of that, somewhere in terms of the innovation, the fintech aspect, there was some amount of R&D, some amount of technological innovation, which was not at a very high pace, or at least not at a pace commensurate with the technology around. And in a way, you can't really blame a lot of the banks, being public sector banks, government run banks. Yeah, there are private banks as well. But again, with the traditional banking mindset, their focus was not on tech. Their focus was not on an easier, faster, smoother technology interface, right? Their focus was always on processing, a transaction, a remittance, for instance, right? Now, then what happened?
Doing the job, yeah. But
exactly.
That's what brute force. But I mean, when you go to the government, state banks in India,
yeah,
even to this day, they don't have electronic bill counters.
So somewhere, I mean, the technology focus, from the traditional banking system was not there. So you had a lot of these players, these technology companies that came and said, hey, we can work with the banks. And that's how it started, right? That's how the payment gateways first came and said, a payment gateway will contract with, 50, 60 banks, scheduled banks, commercial banks, nationalized banks, PSU banks, and say that, I will partner with these banks. I will partner with an e-commerce site to help them process, card transactions, internet banking transactions from all these banks. So it's really where these tech companies, came and said, we will work with you, and that has evolved, right? So you have today, for example, you have the concept of a payment aggregator who is an erstwhile payment gateway that actually helps in processing the transaction, right? The PayUs and the Razor Pays, similar to what PayPal does, overseas, is that they help process. So they route the money, so money goes from user to the payment aggregator and then gets disbursed to the merchant. But you also have payment gateways now who are technology service providers. So they, for example, will still help, they can help in, KYC related work, in, document work, in the underlying technology to ping, the API integration for the transaction. So you still have tech providers, right? Now, and obviously you had the card networks that also came in. Now, the card networks in India still ultimately do not process the transactions, but the RBI said that, if you are a card network, the Visa, MasterCards, Diners Club, kind of businesses, they still need to register with the with the Reserve Bank, and they have arrangements with the bank as well, because they help pinging in the transaction, right, when their cards are swiped, right? So they all play a key role in the transaction. But what we've seen are these new age tech companies who are coming up with very innovative models, and we'll come to it when we speak about lending, just technology services. That's led the RBI to introduce outsourcing regulations, because, as you said, right, banks have limitations, especially technological limitations, of their own. So they outsource a lot of the tech work now, both internally as well as customer-focused tech work. They outsource it, right? So we have, the RBI has had to come and say that, hey, if you are outsourcing key functions, in your banking system, like your card management software, your tool, your internal tool, your security, all of these things, you need to ensure ABC is done by your vendor. You need to ensure that there's oversight, monitoring and control over your vendor, because ultimately the buck stops with you being the licensed entity, right? So we've seen this come up, right? Now, this has led to issues. You spoke about licensing regime. Now, what has this posed? Now, we've had so many models where now, fintechs have come in. Some of them have been handling the funds. Some of them have not been handling the funds and just being mere tech providers. So what has happened is that there has been a fine line between fin and tech.
Right.
And some of the tech companies that came into the BFSI sector have crossed over that line into the fin element, right? Money flows through them, they handle the funds in the transaction, things like that. The RBI in the last few years has sought to regulate those entities handling consumer funds. The RBI has always been a very consumer-friendly, consumer-focused regulator, and said that.
So let me stop there. So as they see, there's a difference then between facilitating a transaction versus actively being involved in financial services.
Absolutely. So, for example, today, a payment aggregator, the erstwhile, the Razor Pays, PayUs, Stripe in India, Adyen, Cashfree. These are the kind of payment aggregators who process the transactions, right? We will partner with an e-commerce site, website, and help in processing the transaction through UPI, wallets, banking, cards. They are now brought under a licensing regime because
they're doing this under the imprimatur, under the banner of XYZ banking or financial institution. I'm just a technology provider.
Yes, but not anymore, because funds is being routed through them. So there is a period of time in the transaction, T+2, T+3 days, where the money is sitting with them in their nodal or their escrow account. And that's why RBI has now put them under a licensing regime. And, as of now, we have about 51. We've had at least a couple of hundred apply for authorization as payment aggregators. And we've had about 51 given in principle approval so far. So this has happened in the last couple of years. The approvals have been given as recently as a few weeks ago to a few months ago. But yeah, essentially, if handling the funds, and when we come to lending, it's a very similar concept. But if you are still merely a tech provider, if you are providing an interface or a backend service or an outsourcing service, not involved in the fin element, then you still fall out of the purview of the RBI regulations.
Yeah, I mean, I can see that it's a tempting market. You want to cater to it. You want to service it. But then there's this panoply of regs that you may be in this regulatory net you may be ensnared in. And I think we see parallels with the crypto people, right? That you can't be a de facto stealth member of the financial system and play by your own rules, which many of them for the longest time were saying that. Now less so. But when Bitcoin first came out, when I was speaking at the first Hong Kong Bitcoin events in 2014, 2015, there was this hardcore anarcho-libertarian fringe group who were amongst the most loudest advocates of Bitcoin and crypto, who didn't want any regulation. And they saw the mainstream or middle of the road approach of working with the banks and getting them to use blockchain technology in their processes as heresy, as an anathema, because the feeling was once you get the banks involved, they will manipulate the technology and use it to their own uses, and the beneficiaries will not be the general public, depositors and customers.
Yeah, I mean, I think the RBI, the Reserve Bank, the government in general has been, just touching upon the subject. It's been pro-blockchain, and it has been promoting blockchain to be used, in the banking system. We'll come to the separate topic on CBDC or e-Rupee and how that's now working on the blockchain. But as a concept, they have been pro-blockchain and wanting to adopt it in the securities market, SEBI, the banking system, and all of that.
He's not that sanguine on crypto. He feels crypto is very dangerous.
Okay, so I guess we're opening that can of worms now. Then, Ajay,
people have their own ideas, but having said that, just about every night of the week, I would say there are like 7 to 12 different fintech or crypto clubs or groups or associations meeting in Bombay every night. That any number of events I could go to. So right. The enthusiasm has not lessened. So
the stand of the Reserve Bank of India, and actually the Indian government in general, and we were, Puru and I were attending a tech conference last month where the IT minister, he's a cabinet minister with the government, Mr. Chandrasekhar himself clarified the views of the government, and it's what we've known for a while, right? The government for the last few years has not been pro-crypto, right? And if you see the latest paper on CBDC, they have clearly said that there are risks with crypto. It is unsafe. The value fluctuates. You cannot create a parallel currency. The Indian rupee is not freely convertible, and hence you cannot just buy, trade, exchange rupees for crypto. And they have given these reasons, and building upon these reasons, they have said here, this is the e-rupee, which is a safer form. Now let's go back. Let's say why, right? Now again, I'm coming back to the real ethos behind this, right? The Indian government, the Reserve Bank has always been taking an approach to protect consumers in India, protect the Indian individual, right? And this comes back to a cultural aspect, the savings mindset, do not lose funds. So when a lot of people lost funds, lost savings, the investments in crypto, took a plunge, that was when the Reserve Bank had to come in. And it's a very similar thing with Singapore, right? With the whole Terra Luna, that happened, last year, a lot of Singaporeans lost a lot of money, life savings. The Singapore government had to come and had to step in and say, we are going to clamp down a little, tighter on this. They're debating, more regulation under their Payment Services Act. They were debating it in Parliament as well, because it is then at this stage that the government steps in, right? And where we stand today, let me tell you very clearly, right? Crypto today is not specifically permitted, but it is also not specifically prohibited. We do not have a specific law on cryptocurrency today, right? So since the Supreme Court judgment, which our firm, worked with and, won for the industry to set aside to constitutionally challenge.
Delhi High Court or the Indian Supreme Court?
It went to the Supreme Court. So we were for the industry, represented by the IMEI, the Industry Association. And we had the RBI circular telling banks to not deal with cryptocurrency. We had that struck down as unconstitutional, and they set aside and withdrew that circular, right? And since then, the government has been working on a regulation. Initially, it was called the Prevention of Cryptocurrency Draft Law. It was then changed to the Regulation of Cryptocurrency Draft Law. We didn't see that bill. There were, whispers and rumors that they may allow crypto to a certain extent, through a whitelist model. But honestly, that was never going to be practical because things in crypto happen so fast. You can't set up a committee to study one cryptocurrency and 6 months later approve it, because then the whole boom has happened and it's come down. That's not.
As in, by whitelist, you mean approved on an ad hoc basis after consideration and deliberation? Yeah.
There was a thought process based on what the underlying asset, based on what the underlying trigger for that crypto is. They would maybe have a committee study it and then say, okay, can we permit it? Should we not permit it? It was deemed not permitted, but should be whitelisted and actually permitted. All of this did not fructify. It was just contemplated, by the government, and it's not seen the light of day. We still don't have a crypto law in place. But the stance of the government has been very clear, right, and clarified by the minister, himself, and time and again, by the RBI, is that no crypto, right? For the reasons that I mentioned, they've told the exchanges. Again, there's no law, but banks have not been supporting the exchanges. Banks have been pulling out. So they are not processing deposits, withdrawals from crypto exchanges. So a lot of crypto exchanges are basically cut off at the legs, right? Coinbase entered India. They had UPI, and that was a big thing. They partnered with UPI. Within 24 hours, UPI was pulled out. So users couldn't use UPI for that. And that was a big setback, right? So the banks, the UPI are under pressure from the RBI not to support, not to facilitate transactions with crypto exchanges. So they're basically cut off at the legs.
Yeah, it does seem that way, that they're eager to enter, but there are just too many obstacles that have been placed in their way. So if we're talking about digital lending and the evolving models, buy now, pay later, and the recent guidelines on lending apps, what are your impressions?
So lending is something that has picked up a lot in the last 2 or 3 years, right? Especially with COVID, I would say there are a lot of these apps that say we'll give you a loan in 2 minutes, right? A lot of these small value loans up to about 500,000 rupees. What has happened here is that there was a lot of
this is unheard of, that kind of easy credit in India.
Easy credit, yes. Easy loans, easy credit, loan approved in 2 minutes.
I mean, compared to past years, I don't recall it being like this 10 years ago.
So that's the fintech. That's the fintech development. There were no apps 10 years ago to do this. Now I'm getting messages. There are so many of these apps that say, in fact, you are pre-approved or pre-qualified for a loan. How? I don't know, because I don't have a relationship with these people. So I don't even know how. But so that's the thing, right? So a lot of these apps have come in. and they partner with banks in the back end. So a lot of these are just tech providers. They partner with banks in the back end. It's not, a lot of it was not clear how the arrangement works, but they were giving these loans, and there were a lot of issues with these apps, right? And we've actually had to advise a few corporates on this. So what these apps would do, and these are not official apps of maybe banks or big players. There are a lot of these, some of them fly by night apps, some of these not so well known apps, right? So what do? They come and say, loan in 2 minutes. They charge really high interest rates. There was a huge problem from a data perspective where they would take a lot of your data, a lot of app permissions. We had a couple of cases where employees, of corporates, clients came to us and said that they're getting harassed internally in the company because some employee has taken a loan, and while taking the loan, the app has asked for permissions on the phone from the borrower's phone, accessed all their contacts, and now calling up their contacts and threatening them.
Wow.
And even saying that the borrower has named you as a guarantor, whereas actually that hasn't happened. Or you're a friend, you're a family, you need to make so these kind of things are happening. They take app permissions, they collect your data, share it. A lot of harassment, so a lot of threats, extortion, blackmail, harassment calls, visiting residential addresses, a lot of underhanded means to recover the loans. So there's a lot of these practices that were reported in the last few years. Enormous high interest rates, all of that, even charges, even to prepay the loan, there were high charges. So a lot of this was, very unfair, unreasonable, illegal in a way, and, against the consumer. So the RBI had to clamp down on this. They just introduced digital lending guidelines, to regulate this.
Yeah, no, I never studied debtor-creditor relations either in the US or in India or even in Hong Kong. But yeah, it's important to.
In fact, in India, I mean, you know about it. So India, over the last 2-3 years, has banned multiple apps, most of them, Chinese apps, because of the unfortunate scenario of political tensions between the governments, right? So they've occasionally, every few months, issued blocking orders, to the app stores and the web hosting providers to block these apps. The biggest being TikTok. TikTok is banned in India, right, since 2020, if I'm not wrong. And we had Indian homegrown substitutes and all of that. Beauty Cam. These kind of apps are quite some of the popular ones, which were banned in India.
And you saw, well, I won't say social upheaval, but in certain influencer communities, some kids ended up committing suicide because TikTok was life.
Yeah, and again, the government recognized that, right? I mean, do you remember the Blue Whale, challenge, the Blue Whale game as well, when that came out, right? And the Indian government, the Ministry of Information Technology, Electronics, we call them MeitY, they had to come out and say that this is even social media, even if there's no legality, it is affecting people, causing a sense of they came out specifically against the Blue Whale game, because that was criminal. That had criminal implications, in terms of aiding, abetting suicide, and multiple possible offenses. But even for TikTok and a lot of these apps, the reason behind blocking them was security of the country, data flows, the impact that they have on the Indian society, on users, right? And they blocked them. Just what I was saying was, even on lending, they just blocked 94 more lending apps a couple of weeks ago.
Wow.
They then unblocked a few after the study, but they blocked almost 100 digital lending apps because of these malpractices that are done. And the problem is, you have a lot of the middle class, maybe the lower middle class, maybe people not so savvy, who will not read terms and conditions, who will not do their due diligence or look up a particular service or reviews. When they see that, hey, you can get 10,000 rupees of immediate credit, they'll just sign, they just click accept. And they don't think, or they may not know or be aware of the hidden charges, the high interest rate, possible harassment that's going to come their way through calls, visits, to their residents, calling up their contacts if they make a default. They possibly don't know about these consequences, but that is how they were getting bullied and consumers were getting harassed. So the RBI had to come up with these measures. They came out with a press release also, describing a lot of this, anti-consumer, harassment and, behavior by some of these lending apps. And, they had to clamp down on it.
I can see how it might be tempting if you're a laborer and you're moving to a big city and the money just, you don't stop spending. Certainly in a city like Mumbai. I mean, it just, certainly compared to what they're used to. So if you're tech savvy, a lot of young people, they're getting e-wallets. And I think you pointed out it's leading to co-branding and white labeling issues and cross-border flow issues. It should be pointed out that e-wallets need to be treated with care. And even just the notion that you can put your crypto coins on a flash drive and put them in your pocket, that's not completely safe either. I mean, there are multiple ways to hack e-wallets, and but in certain places in the world where people don't have faith in the banking system, they don't have faith in the government, the currency, crypto has been used as a hedge, and e-wallets have facilitated that. So I don't know. What are your thoughts? Or should everyone grow accustomed to such modalities, even if they don't necessarily use them that much, just understand how the technology works?
So I think there are two aspects to it. Let me start with, the vanilla, e-wallet, how it has, come up, and well, there's a bit of a revival operation, going on for e-wallets. And I think it's mainly the gaming industry keeping it, operational. But let me throw some flavor on that. And I'll ask Puru then to step in, on some of the newer models in terms of, crypto, in terms of tokens, attached to some of the securities, and some of the models that he's seen. But e-wallets as a concept, has been around, for a decade or so now, right? They started off as basically very small, up to, I think, 10,000 rupees you can keep with, very minimal, submitting very minimal information, and that limit was now increased to about 200,000 with more KYC, documents. But essentially, this was made to facilitate transactions. So this came pre-UPI, right? And this was the next substitute you had to a debit or a credit card. And let's understand that credit cards, though it's a big business in India, barely less than 10% of the population actually have credit cards, right? So this was more of a alternate, sort of a safer model to debit cards. There is, though there are, security related points and aspects and, OTP, two-factor authentication requirements and all for card transactions. There are obviously still some risks, with transactions. You cannot rule that out. So e-wallets was always meant to be, those kind of wallets to facilitate very small payments, right? That has aided the gaming industry. So the gaming industry in India has really thrived through the use of wallets. In fact, we have a lot of even offshore gaming operators who, offer games in India. They have, wallets outside India where, users can deposit money and all of that. And, the Indian government has even recognized that and said that, we understand that Indian users have money in, overseas wallets that they may use for gaming purposes or, regular shopping, things like that. All that we ask is, disclose it in your income tax returns, what money you have in your wallets outside. But
so they're going to exercise jurisdiction?
Exercise jurisdiction in terms of disclosure from a tax perspective. That's it. Not in terms of regulating those players. They can't regulate those players, right? But coming back to, the wallets in India, there was a licensing requirement if the wallet was what we call a semi-closed or open. Now, there is a closed wallet. There's a concept of a closed wallet. Where if there is a website and if they issue a wallet or a point system or a gift card, and if I can use it only with them, that is closed, right? But if there is an issuer, and if I can use that wallet or gift cards or point system with others as well, that becomes semi-closed. And that falls under regulation, right? You need a license. for that. And again, there are minimum net requirements of almost $1 million, similar to payment aggregators, what I mentioned earlier. So these wallet providers were brought under licensing. Were always meant to be under licensing, regulations, right? For semi-closed wallets, for example, a Paytm wallet, being a MobiKwik or a PhonePe wallet, I can use across merchants. I can use it when shopping on, Amazon or Nike.com, or even McDonald's or a food delivery app, or various merchants whom they have tied up with. These are regulated, right? Now with UPI, I know UPI is next on the agenda, so I won't touch too much upon that now. But with UPI, the e-wallet market started declining, right? People felt that there was no purpose, there was no reason or practicality in having a wallet anymore when I can just transfer money to somebody with a mobile number through my phone. I can scan, if I need to transfer money to Puru, I can just scan the barcode on his phone or take his mobile number and transfer money to him. UPI has made it that easy.
Right. There's point-to-point transfer, no intermediary.
And there's no purpose for me to load money in my wallet, which is one transaction, and then transact with him, which will go to his wallet. And then once it's in the wallet, you can't even take it out. I can't take it out as cash or back into my bank account. There are restrictions on that, right? So it has to be in that wallet until I spend it on something else. So, Indian users said, no, this is a little too much. We have UPI now. So the wallet industry sort of took a big hit, right, with UPI. The government tried to give some incentives and said, if you come for a license, earlier they used to give, for example, a license for 5 years for a lot of the entities issuing wallets. Now they said we'll give you a lifelong license. There are some businesses like Quicksilver, Oxygen, who are in the business of white labeling wallets. So a lot of e-commerce sites, a lot of apps that have their own wallets or semi-closed wallets are actually co-branded or actually white labeled by these wallet providers. So that's a big business, all together. So they try to revive it. Wallets are still relevant mainly for gaming, where you can use wallets across, fantasy sports apps, social gaming apps, casual gaming apps, and all of that. So that it does provide some amount of ease, for that. But that's from a pure, money payment perspective. But maybe I'll, loop in Puru to have his say on how these models have also evolved from a crypto token, NFTs, also relating to more legitimate stocks and gold and those kind of models.
Okay.
Actually, let me just pick that from the gaming industry. Like how Aaron said, gaming industry, it was a breath of fresh air for digital wallets or e-wallets. And since UPI came in and became popular, even the use of wallets came down. But just like the gaming industry, there was also the crypto industry, which also saw the wallet products as an opportunity, right? Beginning, I think around 2020, 2021, when there was a real boom, we saw a lot of cryptocurrency exchanges in India partnering with e-wallets, so that if I'm trying to buy crypto on an exchange, I think people would remember that WazirX had a integration with MobiKwik, and everyone could load their MobiKwik wallets and then trade on WazirX. Now that was an arrangement alternative to, say, me directly paying to WazirX, and which might have some, which may or may not be supported by banks. So we saw a lot of models coming around that time during the crypto boom, a lot of exchanges partnering with e-wallets. But after that, I think, when the RBI also started, not supporting or, putting the pressure on banks and payment aggregators and payment service providers to not transact where crypto is involved, then we also saw wallets kind of pulling out of getting into these arrangements with a lot of crypto service providers. So we also saw the rise and fall of these integrations. So it's quite interesting to see how wallets kind of interacted with crypto products there. But on the other hand, we also saw a lot of like lately also there've been a lot of wallet providers who operate not just in India but across various countries, right? We have a lot of non-Indian wallet providers also. Now, of course, there are crypto service providers, there are NFT marketplaces, etc., who have also engaged with these international wallet providers and who still continue to do it. So even now, for example, if I have to buy an NFT on OpenSea, I can maybe pay through the usual payment methods. I can use my debit card, or if it's enabled for international payments, I can use my credit card. If the banks don't process them, what OpenSea or Rarible, etc., do is they also provide me a payment maybe through something like a Circle wallet, where I actually load the money and then pay through these wallets. So yes, there are, this it does provide some alternative opportunities for payments towards crypto or NFT products. So there, yes, we have seen, there has been some kind of development, and it also kind of continues engagement with users who are still not that tech savvy, but still want to kind of, buy crypto products or buy NFT products. Like Aaron said, right? Like till now, it's not that there has been any regulation or any express restriction since the RBI circular got struck down that prohibits people from undertaking crypto and NFT transactions, which is kind of also helping wallet-oriented products in this way.
I mean, on balance, it seems as though, from a consumer standpoint, India is moving ahead because people are getting more choices. But of course, it complicates the payment landscape, which brings us to how do you regulate crypto? I mean, is it, and this has been the problem from the beginning, right? Is it a digital commodity? Is it a currency? Or is it a payment system? And, true Bitcoin acolytes would say it's a three-sided pyramid. It's all three. But I mean, depending on which side they present to regulators, it's going to get a different kind of treatment. I mean, in Hong Kong, the HKMA, our de facto central banking regulator, has said these are digital commodities, and you trade them at your own peril.
I think a lot has happened in the last few years. Right from when the RBI came out with the circular. I believe it was in 2018 when they came out with the circular to ask banks not to deal with cryptocurrency. And at that point of time, banks pulled out from supporting exchanges. Till then, it was done. A lot of people started jumping on the crypto bandwagon. Exchanges were flourishing. But once that came in, banks had to pull out, and then users couldn't deposit funds, withdraw funds from the crypto exchanges. And they, again, like I said, they were, cut off at the, at the knees, right? Since then, once it was overturned, between the Supreme Court, we've had sort of a lull. We've had, and as of today, there is a certain amount of tension, I would say, ambiguity on where things are heading, what is really happening. But I think the sentiment is quite known. And as I said, the government is time and again said that they are not in favor of crypto in India. The Indian rupee is not a freely convertible currency. Cryptocurrency has too many risks associated with it in terms of the fluctuating value that it has, in terms of the, what it is codependent on, in terms of, moving up and down the scale. And that's why the RBI has pointed out these risks, and they said it's not a safe, it's not even a currency. It cannot be synonymous. It cannot be a substitute for currency. And you cannot, you shouldn't use it, as a form of currency. I mean, these are the observations they've made in the concept note on CBDC, which is the digital rupee that they've come up with. And we'll come to that, how it's looking. And, we tried out the model just last week, so we can, shed light on how it's working practically as well. But this is what they came out with in their report. So the sentiment is quite clear. They are pro blockchain technology. Again, there's always that argument that how does blockchain work in isolation without crypto, and a lot of the, the more tech savvy technical people or the engineers would be in a better place to make that debate. But we've heard both sides, and there is a strong debate that you can't have blockchain itself without crypto. But anyway, that's a separate point altogether.
I guess
crypto,
it's a matter of what do you apply the technology towards, right? The same basic principles of physics give us plumbing, but they also give us aerospace, right?
Yep.
So it's a matter of what, the engineer, for example, if I were to reason by analogy, the curriculum at engineering schools is the same for the first 2 years.
Yeah.
So it's a matter of what do you apply that underlying technology, those principles towards. I mean, people are talking about other uses for blockchain, such as the three-party ledger system, in terms of cutting down on mistakes made in hospitals, which we've seen in the hospital system in Hong Kong. I mean that type of thing. That using blockchain to ensure accountability, but of course, the tendency tends to be, how can this be capitalized? What's the most? How do you make money off of it? And in that light, yeah, then naturally you're always going to associate blockchain with currency,
right?
Because that's, in a sense, that seems to be the easiest way to monetize it, to capitalize on it, to derive some economic worth from it.
Yeah, no, that's a very interesting point that you actually brought up, and somehow maybe the government might not fully agree with you. There was a national blockchain strategy that the government had released early in maybe 2021, Jan Feb, and one thing that I observed in that report is, out of the whole report, maybe cryptocurrency itself has been mentioned some 4 times, and maybe 2 of them were to just bring out the fact that cryptocurrencies like Bitcoin have blockchain as the underlying technology, and the other 2 times was just warning how cryptocurrency has a lot of legal challenges, and they should be regulated and made sure they are done in an accountable form. So that way you could say that blockchain can best be monetized through crypto, but somehow the government would not fully agree with you if you ask them. And we have seen a lot of actually even new age business models that are trying to come out with having only blockchain based applications, which maybe do not at least interact with crypto at the customer level. Maybe at the business level at the back end they do, but at least at the customer level they try not to. So we do sort of see some innovation growing in that end, but right now that is the stand. And even the government has said that, look, as of now, if you ask us, if you ask how the Indian government will regulate, we're not looking at bringing out a regulation until we see, say, a global consensus on or maybe even a consensus at a G20 level. I think Prime Minister Modi had also mentioned it a few weeks back, that if there is a consensus at least on an international level, that is the stand that India will then take.
There's this amongst the pro-crypto crowd, the proponents, the advocates of crypto. There's a sense of inevitability that they're going to win in the long term, and this requires state support. The state has to permit it, and the sovereign wants to be the one to mint the coin of the realm. So I don't think they are allowed to get away with as much as the governments let them get away with. But this brings us to the next point. I think most governments see crypto as a virtual asset, a virtual, digital asset, a commodity. And most of them are in favor of taxing it. But in a developing country like India that's made many strides, but a country of 1 billion, how do you tax crypto?
Right. I'll take that, Ajay, but I think just before coming to the tax aspect, right? Let's
Sure.
I just want to spend some time on what are the other issues on crypto that's there today, right? Since we've opened that can, right? We spoke on the technology, blockchain, versus crypto interdependence, and pro blockchain against crypto, and the regulation. But I think when you look at when Puru said, they may be looking at a possible consensus at a global level and see where things go, let us also understand that there are various stakeholders in India as well, where consensus may be made, right? One of them is the tax department, what you said, right? A very important stakeholder, right? Let me put it this way. The government is in favor of banning crypto, but the tax department wants to tax crypto and has already started taxing crypto. Yeah. Right. So let's look at this gives us a flavor of, the mindset, the approach. And on the other side, you have things like, anti-money laundering, right? You have the enforcement directorate, you have the intelligence wings, monitor transactions with crypto exchange. So there are crypto exchanges running today, right? Through very few
Because
banks.
I mean, they see the national security implications of it.
Exactly. And they then see because they still have to monitor the transactions, because let's remind ourselves, there is no law today prohibiting crypto, all right, or trading crypto, buying crypto. So you have these wings who are monitoring transactions, and then who are running, behind the exchanges, saying that you are facilitating transactions, handling user money, remitting it. Have you done KYC? Where are you remitting it to? Is it going out of the country? For what purpose is it going? Is it, for example, terrorism financing? Is it to a FATF black or a gray list country, where it's not supposed to go to, or where it's supposed to go to after an approval or a disclosure to the government? So they are going. So this is not a direct crypto regulation, but you have these regulators or these enforcement authorities who are going after the exchanges, after the players, and some extent the payment processors. For example, during COVID, this was booming, and we were dealing with a lot of cases. ED had gone behind them for there were a lot of anti-money laundering cases registered on routing money to and from Chinese nationals, in and out of the country onwards. What was the purpose? All of that, raids, production seize of search seize of documents, transaction records. So you'll have, so you have that happening. Keep in mind, there's a tax department who's already in the last Finance Act, introduced tax measures, for it. You have even the Reserve Bank, even MeitY, who is talking about, storing logs, doing KYC, conducting customer due diligence, and all of that. And you still have the banks who are very conservative, and fair enough. I mean, they are licensed, and they are answerable to the Reserve Bank, but they are very resistant to facilitate crypto cousins or crypto related transactions, cross-border transactions. AD banks are not hesitant to do that. And because of all of this, trade exchanges have lost liquidity, right? You've had a lot of homegrown exchanges that have had to flip, and we've had this discussion, you and I, over the phone. A lot of them have flipped to Dubai, initially flipped to Singapore. Founders have moved to Dubai, to the Gulf, and they're now moving outside and maybe just setting up headquarters, holding structures, in other entities. In other countries, and maybe just dropping down in India entity, or maybe just operating from outside India. But that whole charm of India-grown startups, exchanges now, unfortunately, that's not been, the regulatory regime has not been favorable to them, and we've had this as a result.
Yeah, that ecosystem has largely, I think, moved there, and they've got VARA, the Virtual Asset Regulatory Authority, the first regulator of its kind that speaks their language, is very lenient, willing to give them what they want. I'm not necessarily sure if that's a good thing, but they have their it has become the playground of the crypto rich, the nouveau riche, the new wealth that has been generated from this. And let's see what risks happen, right? I mean, the next time we have the crypto winter of 2022-23, the next time something like that comes along, I mean, we'll see how many people get burned. I mean, in terms of the authorities in India asking all these questions you were saying, with an eye towards AML, KYC, that's understandable, because the actual blockchain record itself is not a complete record. I mean, this is a recurring thing on the show, that it tells you where the money went to and from, point-to-point navigation. You can do that. The quantum of the transaction, the amounts involved. But you don't know who the parties were, their nationalities, their backgrounds, their families, their professions, their industries. And as we know, for most banks in the modern age, you get a certain risk weighting, and that you fit into their risk matrix somewhere. So the blockchain only works for a regulator or law enforcement doing an investigation if they've got the other pieces of information. And those are the questions you're saying, right? That as soon as crypto is involved, they're asking you 120 other questions to complete their record so that they know, the full details of who's involved in this transaction. Yeah, people regard that as cumbersome. So in order to not deal with that, I can fully see why they're going to Dubai. So now we come to the topic of CBDCs, and that's a hot topic in Hong Kong. And, as we know, nation states can't have cryptocurrencies. They have CBDCs, but now people are talking about the e-Rupee, and I guess it's different from the digital currencies that we have in the digital money we have in our accounts, because, CBDCs are unique in that each e-unit of currency has its own serial and registration number, the way a banknote does. So it's unique in that sense. What does it add to payments to have unique units of digital currency, as opposed to right now, okay, this person has X in their account, another person has Y in their account? Those units are not necessarily distinguishable, they're fungible.
Well, yet to be determined completely.
Yeah.
This honestly looks like a measure, by the Reserve Bank in a way to quench the thirst or satisfy the appetite of Indians who want to do crypto, but who shouldn't do crypto, and instead, it's a CBDC, so it feels like you're doing crypto, but it's not really crypto, right? Let me tell you why. So e-Rupee, or the digital rupee, that is the CBDC. So it's not a separate currency. It is the rupee. It is just a digital form of the rupee. So, and the ratio is a 1:1. So if I have 1 rupee in my bank account, if I have a 1 rupee coin, or if I have 1 rupee as an e-Rupee in my wallet, it is all the same. So it is nothing but an extension or a digital form of a rupee.
So that e-Rupee, unit of e-Rupee, does it have a counterpart in the real world?
Yes, it does. It does. It's nothing but a digital extension of it. And it's okay. Let me tell you, let me tell you a little more. And I've used the currency. It's just been introduced by some banks. Some banks have gone live with it. So I happened to just use it last week. And some stores have also started accepting e-Rupees. I think Reliance, some branches of Reliance retail stores have, some branches of Reliance retail stores have started accepting e-Rupee, right? So, okay, let's start with what, e-Rupee, really is. They are calling it a virtual, they are calling it a currency, but the reasons for introducing it are basically to reduce operational costs, wear and tear of money, printing money, banks, issuance, a lot of that. They want to promote financial inclusion, help in cross-border payments, reduce a lot of fake currency that may be in the system. So these are a lot of the principal, conceptual level reason as to why they've come out with this. Also, what I said, they've identified a lot of risks with the virtual currencies, with the value fluctuating and, the anonymous, the risks associated with those currencies. So that's why they've come out with this, which is basically an e or a digital form of a rupee. There are two versions. One is the retail one and one is the wholesale one. The wholesale one, they started back in December. Now, these are typically used between banks and financial institutions on a B2B basis, for buying government bonds, for transacting internally, all of that. It doesn't concern us. The wholesale.
Those are like bulk transactions.
Yeah, you can say that.
Yeah.
What is more relevant to us is the retail version, right? And this is basically an electronic version of cash. Let me call it that. It is like I have money in a wallet now. So it's very similar to a wallet, what I said. So now, for example, I have, say, an ICICI bank account or a state bank account, whatever. I can open a wallet, a CBDC, an e-Rupee wallet. From my bank account, I can transfer, say, 100 rupees to my wallet, and that becomes 100 e-Rupees. And in that wallet, I can go transact with a retailer. Again, scan the code or pay through the app or whatever it is, but essentially that 100 rupees gets transacted, right? So it's very similar to a traditional wallet where you load money from an external source. Here it's, I have a bank account, I have an e-Rupee account, I can transfer 100 rupees from my bank account to my e-Rupee account and use it from there. Personally, in my opinion, why I said it's yet to be determined, how far this goes, how much of a success there is to this, because we already have UPI today. And again, the concept of loading a wallet with money to then transact at a POS, when today I can directly transfer money to Puru as a peer P2P or a merchant, a P2M, just by a phone number or a barcode from a UPI. So I feel though UPI is still a payment mode, this is another form of a sort of a currency. So technically it's not the same, it's not a substitute. But I feel when you have the UPI mechanism there, it's at least for a purely from a consumer point of view, it's an easier way.
You're achieving the same end.
Yeah. Exactly. So why do I want to load my wallet with, convert my physical money in the bank, to an e-Rupee and then use my e-Rupee wallet to transact, when I can just directly transact by UPI and money goes from my bank account, to his bank account through a mobile number or through a barcode. It's just one step. Yet to be determined. I feel it's a stopgap measure to really cleanse the appetite of people who want to, dip their fingers into, these virtual currencies and, like it were, they were dealing with CBDCs or, crypto or whatever. But yeah.
Because the way you've described the landscape in India right now, it's more of a novelty, right? I mean, practical necessity isn't there because there are other means to achieve the same end.
Absolutely.
People are already used to.
Absolutely. The long-term benefit, and UPI has skyrocketed. I know we have not spent time on UPI. We'll come maybe to UPI and what's been happening, especially internationally. But UPI in India has been a game changer, right? We have RBI releases statistics every month, every quarter. It's now 70% or something of transactions are through UPI. 70%.
Last time I checked, it was 60. So it's really
give or take. I mean, I think Puru can just open the latest RBI. We'll give you the exact figure, payment statistics. But yeah, it's a crazy number. Again, small volume transactions. So the average volume or the transactional value of the UPI transactions will be lesser. It could be anything from 1 or 2 rupees, which is 1 or 2 cents also, to some thousands. You're not going to have big ticket transactions through UPI. But yeah, it's changed the landscape of consumer payments in India.
Now, someone said to me, when you see a grandmother buying a packet of biscuits using that payment method, then you'll know that the penetration has gone deep into society because people are using it for routine, again, as you said, small scale transactions, individual level, and it does introduce certain efficiencies. But we must add that the civil libertarians feel that their transactions are being tracked. But I mean, if you look at the people who've been predicting this for a while now, the futurists, forward thinkers, science fiction writers, there's always been this notion that in the future, because of the number of people, number of volume of transactions, a lot of things are going to be digitized, just simply for administrative ease. In much the same way that AML gradually became automated all around the world, because the number of transactions banks had to deal with, even small and medium-sized banks, you could not hire enough manpower to look at every single transaction. Only the ones that are red flagged. So what about the cost savings? I mean, in terms of accounting and auditing and payroll savings, I mean,
massive. So I'll give you an example, right? And I'm a little old school, so sometimes when I go to the bank for some work, I still take that passbook of mine. I don't know if you remember. It's
still issue passbooks.
They do. at least for most accounts, maybe not a MNC banks, but they do. And under law, they still have to, right? So sometimes I take the passbook and give it to the clerk to get it updated. And now what they tell me is that they say, sir, there are so many transactions. Do you mind if we just give you a separate printout of it? It's easier for us to print than to keep changing this passbook in the printer and keep changing pages for it to print.
Let me just give you an aggregate report since the last time you updated it.
Yeah, so all they need to do on their computers, open the PDF, put account statement from this day to this day and print it out for me. But they will not, they're very resistant because there's so much work in updating that passbook. But that shows, or they said, sir, can we just email you the transaction, your account statement or whatever. But that shows that that shows the increase in the number of transactions. Earlier, the example you gave of the grandmother, there's so many times now, I can walk out without a wallet, without paper money, or even a card with just my phone, and I can buy pretty much everything, right? From, vegetables, fruit, the side of the street. I just need to scan their barcode. Now, where it's reduced costs is because they've reduced MDR. In a lot of cases, there's no MDR. They're not charging the merchants anything. They were charging them about 2%. I think they've reduced that in most cases. Now there's a lot of these merchants, and it's allowed, even the street vendor. And India has a very big sector, as you know, for, a lot of, the street businesses, right? As in Southeast Asia, it's very
a lot of SMEs, a lot of small
on carts and stalls and, on the side of the road. And it's allowed them to accept payments, because today I don't have 10 rupees in my wallet. I don't have small notes, or, but it's allowed them to accept payments, and it's kept them in business. And a lot of these people, small shops, they just need to pay, if I'm not wrong, to some of these people like 100 or 150 rupees monthly fee, which is $2. It's nothing, and it helps them receive thousands of payments, unlimited transactions. It's a great incentive for them. A lot of as you said, the labor class, the not so sophisticated, well, it's what we started with, right? They have smartphones today. They have an internet connection and data because it's cheap and affordable for them.
But they leapfrog multiple generations because India went straight to digital.
Yeah. And today you can get a smartphone for I don't know, 5,000, but less than $100 equivalent. You can get a smartphone. You have EMIs. We spoke about digital lending, buy now, pay later, all this. So they also take it on EMIs. Very easy to get EMIs, and they do it. But they have a smartphone, they have data, and they have UPI. So it's very easy to transact with them, even, a few rupees if you need to. So a lot of them are on this.
India is ahead of the US even in a lot of these digital payments. I remember when I first set foot in the US in 95 to start college. And at the time, it was like the average American might only carry $20 in their pocket, but they'll carry multiple credit cards. But now we have a point where you have contactless payment and credit cards are passé almost. Because of the strides ahead, and it's good because then in that sense India was able to avail itself of the latest technology, wait and see approach, seeing what works, and this certainly has worked for India. In the time we've got left, is there anything you want to talk about, anything you want to showcase?
So I think, just spending a couple of minutes on the tax, where we lie, just for closure, on the whole, tax aspect, and that does affect NFTs and, some of the virtual digital assets, what we call. So the first definition as such we have of VDAs, or digital assets or virtual digital assets, is from a tax legislation. So, it gives you a sense of how widely things are scattered here, in the landscape. The issue was that definition was defined very broadly to include data sets, any virtual account. It was defined very broadly, but then there was a clarification that was issued. So it would not affect the airline miles reward system, and Puru, feel free to add after this, but it would not affect that. But typically your crypto NFT, something with value in it, over the blockchain, right? And where it hurt the industry, Ajay, is that they introduced a 30% income tax on it. The catch there, which added insult to injury, was that there's no set off. Today, if I'm trading in stocks, right, securities, what I sell, if I'm making a gain I pay tax on. But if I'm making a loss, I can set that off against my gain.
Correct.
Or even carry forward to next year. And that is a benefit I have with stock trading, for instance. Right? I don't have that now with VDAs. So if I take a loss, if I buy for 100, sell for 80, I have a loss of 20. I cannot set that loss off, that 20 off with a gain that I make.
Yeah, it's just 30% off the 30% of the net. Yeah.
Yeah. So if I'm selling something else for 120, I make 20. I pay 30% on that 20. I cannot offset the 20 deficit or the 20 loss with the 20 profit. I cannot do that. And that's a big thing here. There was also an additional point on a 1% TDS, which was put on the exchanges or the e-commerce guys. And they had to do a 1%. And that was operationally very difficult for them to do. And then you had issues.
So tight.
Exactly.
Yeah.
Exactly. And they wanted accountability and to keep it exactly what you said. And then you had the definition so wide that you had, this affected NFTs. Now, NFTs was going, as if there was a sale of an NFT, right? There may have been a problem of double taxation on it as well. So you have the NFT value, but if that has an underlying asset like a musical work or a performance or or an artwork, then that has underlying value and that may also be taxed because that asset is getting transferred, if at all it is getting transferred, right?
Strange, given that it's a derivative work.
Exactly. But if it has an original work as part of it that's getting transferred, the rights are getting transferred, then there could be a double taxation. Then you have to argue that it's just the NFT, which is a derivative and not the original work. Right. But then again, you need to get into that nuance, right? Again, what about minting? Now, for minting NFTs, how do you attribute a cost to minting NFTs versus selling an NFT for a high amount? There's no cost of acquisition there if you're minting it and selling it.
Right. So no basis to deduct.
Absolutely. Yeah. Absolutely. So then if I mint, my cost is, say, I don't know, the gas fee or the, whatever, even if it's 0 or 5, but if I'm selling it for 100, does that mean the 100 is taxed? It did, create a lot of confusion, but that's come into force. They've taken a tough stand on it. Puru?
Yeah. Just a minor point there. Actually, the tax department had also given a clarification that minting requires an infrastructure, right? You have to have like a lot of computing power to actually mint and put those tokens in the blockchain. Now that can't be set off as cost of acquisition. That is something that the tax department does not recognize as cost of acquisition. So that is also something that
cost of mining is cannot be factored in.
The infrastructure.
Oh wow. And it's getting increasingly more expensive to mine.
Yes. Yes. So yeah, that's a slight complication.
I think on the UPI, right? So I mean, and I think we can, I guess, start concluding. I think the two biggest developments, Ajay, has been on UPI and on lending. Lending we've touched upon it, but let's talk about UPI, right? We flirted with UPI throughout the course of this conversation, but UPI has been an absolute game changer. We spoke about 70%. There were 8 billion UPI transactions alone in January. 8 billion, right? So you can see the volume of transactions happening, right? But what is interesting, what is relevant from a global perspective here, and you can add from an Asian perspective as well, is that now we have tie-ups with about 10 countries. Just yesterday or day before yesterday, Prime Minister Modi and the Singapore Prime Minister as well announced a tie-up between India and Singapore for UPI, between the RBI and the MAS. And now UPI is linked with PayNow, DBS Bank in Singapore. And some banks have gone live with it for inward and outward remittances. We also have announced a separate arrangement with the UAE, for cross-border linkage of UPI. Now that India has always been a closed country in terms of inward-outward remittance. I'm just explaining the context here, right? Traditionally, money going in, okay, fine, little easier, but money going out has to be heavily accounted for. It's heavily regulated. Like I said, foreign exchange regulations, convertibility of the Indian currency is a very regulated space in India. There are industry sectors where you can't remit outside. There are prohibited transactions. You can't send money outside, right? There are limits. You have LRS, overseas investment, all of that. Compliances, a lot of that. So for this to happen,
that's why the wealthy in India are moving to Dubai. I'm telling you, they don't. I mean, they don't want to deal with those headaches.
Yeah, I mean, I mean, I know this doesn't affect, this is more on the everyday, the peer-to-peer, P2M transactions, the UPI, but this is a big thing because if this goes live, and I really want, I mean, in the next few days, and I'll be in touch with you, but I am going to test the India-Singapore. They've gone live with it. Some banks have gone live with it, inward and outward. I am going to test it to see whether I can pay merchants there and pay my peers there. Right. And if this happens,
isn't it limited to people with transactions of 100,000 or above?
Yes, actually, there was a limit. Yes, I think there's one equivalent to 1,000 Singapore dollars, which is 60,000 rupees. I read that. You're absolutely right. 60,000 rupees or 1,000 Sing dollars. So there are limits. There are limits. Yes, absolutely. Even for UPI today, even in India, there are limits. So it's not that I can transact lakhs, hundreds and thousands of rupees or millions through UPI. It's meant for, lower value. So in a day, I think it's, they just increase the values, but depends from bank to bank. Yeah, it largely depends on bank, but I think in a day it's now a maximum limit of maybe 100,000 rupees or 200,000 rupees.
Okay.
Yeah, I think some banks may allow 500,000, but there are limits to UPI today as well. But yeah, I mean, this will be going back to the cross-border. They're in talks with other countries as well, but this will be a game changer in terms of sending, relatives, friends, money, making payments to merchants. We're looking to see, because we cater to a global market, right? Basically, MNCs, operators who want to do business in India, target Indian consumers, and if they can possibly look at UPI as a payment option, which as of today they can't, I mean, till today they can't, that is a big thing. Otherwise, operating from outside India, Singapore merchant, say who running a website selling to Indian users, they can't do anything that other than rely on credit cards, which barely 10% of the population have. But if they can tap UPI and get paid in UPI, that will really change the dynamics of cross-border commerce. I'm really excited about the UPI, the cross-border UPI. And Amex, by the way, doesn't have great traction in India, is what I hear from the market. A lot of POSs merchants don't accept Amex, transaction failures. It's not as successful as Visa, MasterCard. Rupee is the homegrown card network in India. So the Indian government is promoting Rupee a lot. Incentives, cheaper transactions, cheaper for banks to issue, all of that. So the Indian market is and maybe we missed touching upon it in the start, it's a very price sensitive market as well, right? Yeah. So a big incentive for users today is cost. Now, a lot of, for payment, for fintechs, wallets, even, possibly lending, all of these things, UPI, onboarding UPI users, a big incentive today is lower cost, cashbacks, discounts, coupons, incentives. For a user to, I mean, India's a very different ballgame when it comes to data and giving data. So most Indians would say, okay, fine, I don't mind opening a new account with a new UPI company if I'm getting 100 rupee cashback, or my first 3 transactions or my first 5 transactions, I'm getting a big discount. They will do that. It is a price sensitive market.
And it's brutally competitive. I mean, we were talking earlier about how tech savvy different banks were, right? Is this necessarily a public versus private sector divide, or is it more of a Indian bank versus foreign bank divide?
It's not really an Indian bank versus foreign bank. It's more of a consortium really of the Indian banking industry. And moving away, I mean, not so much banks, in fact, Ajay. I think it's more the fintechs, because the fintechs are tapping user bases. Their consumer bases drive up their valuations. And in the last decade, we saw enormous valuations. We saw SoftBank and all the American PE investors come in at very large valuations. The Sequoias and the Tigers, and a lot of them, the Matrix, and all of them came in at very high valuations. Right. And now there's a correction happening in the last few years, but that's, global trends and all of that. But they drove valuations up because they were able to show that I have onboarded so many users. And to onboard so many users, I've given them cashbacks. I'm burning money on marketing. I'm burning money on cashbacks, incentives, freebies, but I need to acquire a user base. Today there's a huge e-commerce competitive spirit, let's say, in the grocery delivery sector. Yes. Right, where it's become so competitive that earlier, you get next day delivery, but that's not happening anymore. It then went to 2 hours. Now it has come to 10-minute delivery. And there it's gotten a backlash from the community, from society, from investors, saying that you should not do 10-minute delivery. How? I mean, it's households don't need groceries that urgently. You're putting riders on the road at risk, affecting their safety. You're driving up congestion and disobedience of traffic laws on the streets. So that was met with backlash, but that just shows how competitive the sector has come for apps to offer 10-minute delivery now.
People have pointed to that the Indian market is brutally competitive.
Very.
How do you turn a profit?
That's the thing, right? I mean, if you're following the Indian stock market, a lot of the new age tech companies, the e-commerce fintechs they're not. I mean, when Paytm listed, what happened with them. Nykaa, a lot of the, what was it, Policy Bazaar, IPO, a lot of these new age fintechs, profitability issue. And after Paytm, a few fintechs delayed their IPOs. They didn't go public because of that. So it's ultimately, there has to be a strong revenue model, which a lot of fintechs don't have, because traditionally they've had a lot of investor money, and flexibility to burn that money. But now things are changing, it seems.
Gentlemen, thank you so much for your time.
A lot of things happening, a lot of excitement, and I'm sure we'll keep speaking because there will keep being new things and developments to speak about and keep us engaged.
We hope you'll come back. Thank you again. And to our viewers and listeners, thank you. Until next time.